What's up, everybody? This is Chris from Black Land Ownership, and we have an amazing, special, awesome, intelligent, forward-thinking, dynamic guest today. Please introduce yourself.
Thanks so much, Chris, for this glorious introduction. I'm Yael Tamar. I'm the co-CEO and co-founder of SolidBlock, and we use blockchain and crypto to make real estate work for everyone.
Awesome. So, brief background, I became familiar with your work because I attended a presentation. I went down to a blockchain conference in Miami. I was part of a larger IT expo, and I was there to learn about blockchain, some of the innovations, some of the other industries it will relate to, not just crypto, but looking at real estate, looking at shipping, looking at medical applications. And I saw yours that dealt with finance, that was real estate, and a majority of your conversation tied in traditional elements of finance and the idea of centralized finance and banking, and then this idea of DeFi, and then what blockchain might open up when it comes to real estate. So please give us a little insight into like, what does that mean in the first place? How'd you get into it?
Sure. So I'm actually a finance person, right? So I started on Wall Street at a broker-dealer, moved into M&A and private equity, then worked on IPOs, right? So the majority of my life was making kind of rich people richer. And, I at some point I went into structuring funds that were then sold to high net worth individuals and private banks, right? So kind of moving money from one place to the other. And then at a certain point, after a money laundering incident at our company, which closed down, I had some time to think, where I want to go. Do I want to continue this route in finance or do something else with my life? And at that point, I actually almost became a yoga instructor just because I needed a break. And then a friend of mine was in blockchain, and he really needed a finance person because he was selling to banks and other regulated institutions. And he was like, come and you can do yoga at any time. So, obviously it seems like I'm never going to become a yoga instructor because, things just never end on the entrepreneurship side, right? So obviously I went and started working with him and then continued to work with many other companies. It was a year of ICOs, initial coin offerings, where kind of communities got their hands on new financial products, which unfortunately most of them went down the drain because of lack of execution and abuse of compliance and regulation, or the lack of thereof. To make a long story short, I really got into blockchain as it gives a lot of tools to people who don't have access to banking. It gives a lot of tools to companies to reach their community and investor base and so on, right? From, let's say, an example of Facebook's coin, which didn't work for the United States, but hopefully will reach the masses and give people an opportunity to use financial services. Facebook users, there's out of global a population, like 2 billion people don't have access to banks and loans, and that just creates a situation where they don't have anywhere to go and nowhere to develop, right? Lots of poverty everywhere. And people in the US don't realize that in America you have a huge amount, 20% are underbanked as well, right? And the majority of that are minorities. So what we're doing, what I got into is kind of using blockchain for good, or enabling anybody to invest in real estate, which I think is actually the basic asset which you should start with. I love when people get into crypto, but I'm more of a little bit of a conservative person. I do have a lot of my money in crypto, but I also have real estate, and I have some basic, safe assets, which I think people should definitely start with. So yeah, that's basically how I got into this stuff.
For people that wouldn't know the difference, what would be some of the initial standout points or areas where you had to adapt going from more traditional realm of finance to blockchain and how it works with finance?
So in the traditional realm of finance, there are two things. One is institutions that govern how things operate, high levels of compliance, All right. So, and the second thing is, yes, there is evolution, right? So institutions do know that there are new asset classes coming all the time. So, just like mutual funds came into the space, hedge funds came into the space, then, ETFs and index funds, and, then you had Forex, jump into the space. So there's like all these things that, and they know, institutions and, investment bankers, they know that things are coming up. They're just kind of cautious about it in the beginning to see if they really gain pace. So now we can see with certainty that cryptocurrencies, are not going anywhere. Once the institutions got their hands on crypto, that's it, right? So now majority of them already have Bitcoin and Ethereum and a few other assets, right? So that's number one. But in the crypto world, right, in the cryptocurrency world, these new investors that are on E-Trade, or they're on Robinhood and so on, where, by the way, now you can also invest in and cryptocurrencies and things like that. So they invest differently. People invest differently. They they have different tools. There's not that much, or in crypto there are analytical tools, but in some newer things like what we're doing in real estate, we have to create those tools, right? In digital real estate. So that's a very, very different. This is driven by consumers, what people want to invest. It's really product driven. So even within real estate, obviously, as you know, you have a lot of different products you can invest in, and they're trends. So people want to invest right now, let's say, in ESG products, like environmental, social governance products, or sustainable products. So we're listening, and we're, especially our audience, which is younger, which is, more savvy with technology, invested in real estate online, invested in cryptocurrencies as well. So that's kind of our audience. So they care about the projects that they invest in, right? So that's basically it. So the difference between the traditional finance is that they're very much driven by security, compliance, and yields. And, in our world, people are driven by story, impact, ability to choose and to contribute, and also ability to keep shifting things. Institutions don't care about liquidity that much yet, but individuals care about liquidity a lot. And that's where we come in as SolidBlock.
Now, for some folks that may not understand some of the classes, some of the terminology, what would a difference be between a hedge fund, mutual fund, a asset class such as property, and then where crypto falls into the space?
Sure. So, I was just giving an example of evolutions, different years. Let's say hedge funds, I think, sprung into the world in like 1970s, right? And before, nobody has heard, not that nobody has heard, it just didn't exist. So a hedge fund is just basically a partnership of investors. Investors come in as limited partners, as LPs, that uses risk methodology. Like they usually actually invest with borrowed money, right? So people pull in their assets and then they borrow most of the money, and that's considered, kind of risk. That's why you have hedge funds, because you're hedging the risks, right? The more you leverage means the more you borrow money against your initial equity pool, the higher rates you're gonna get, the higher returns, obviously, right? Because some hedge funds borrow, huge amounts, 80, 90%, right? So, your rates are going to grow much, much higher. So instead of 10% annual return on an asset, you'll get over 20%, right? So that's basically, you have large capital gains on the project. That's a hedge fund. A mutual fund basically is just a fund that pools a lot of people's money together, and that's it. It's just mutual, right? People's money together, and now because they're bigger, they have access to institutional grade projects that don't take small investments. So as an individual investor, even a high net worth individual, I can't get in on $200 million projects. I have to invest at least $1 million. So when I pool my money together with other people in the mutual funds, now I can invest. That's how old finance operated. Now we have tools like you can't even believe. You can create your own, you can create your own sort of a hedge fund with decentralized exchanges. That's a new thing that came to life, where people just kind of like when Robinhood, so kind of like when people on Reddit went in and just decided collectively move stock prices. So, you can do this in a decentralized manner, just pool people's assets together. So you can actually use those pools to buy products. So that's actually really, really cool, right? So we live in an era where you can use technology to create new products and new ways of investing, right? So that's pretty cool.
Yeah, you got us to an area that I wanted to go. I'm glad you did that. For folks that don't know, there are rules around accepting money from people as well as investing in certain products. So like in real estate, one of the issues is I think you have to be like a verified investor, which means you have a certain amount of liquid capital, you have a certain amount of income, or you've been involved in certain projects, so that if I want to engage in certain types of investment, there's a minimum amount of money I might have to have, or to start certain trading accounts, you need $25,000 to even start a trading account with certain banks. Whereas now with some of this decentralized technology, a person like me, where I've made art most of my life, and I would never classify any of those arenas, can get involved in stock trading. I can get involved in some of the pools that are associated with some of these assets.
Yeah, for
and with
sure.
crypto.
So there are several ways so what you're saying is that basically they're high net worth individuals, sometimes called accredited, and not high net worth individuals that are also called retail. And the reason why they're called retail is we can even think about like accredited investors or high net worth as higher risk, because they usually invest in the very beginning, and then when the project develops and it gets on what's called a secondary market, which up until now was mainly the stock exchanges. That's when retail investors that the SEC or the regulators want to protect, that's when they can get into it. And on the secondary market, you have much higher regulation. You have to have audited financial statements most of the time. You have to have reporting. You have to have all of that, right? So it protects the investors, right? So they don't make high risk investments. So that's the reason why accredited investors have access to more projects, which you can also think is unfair because they get the majority of the yield because they invest at a higher risk, right? So basically, what you are referring to is a securities issuance, unregistered security, private security. When I have, let's say, a real estate project, most of the time I'm using some exemptions that were created by the United States government in 2012, the Jobs Act. Right. So the Jobs Act actually was fantastic. It was created to let business owners and small businesses an opportunity to get investment from the publics by creating a private offering. You can do unlimited amount of marketing, but you can only accept money from investors that you vetted as accredited. So, if you want to accept money at that stage from retail investors, there's still ways to do that. And one of those ways is going to crowdfunding platforms where you can now raise up to 5 million, and they fulfill all kinds of regulatory requirements, right? So we at SolidBlock, with every offering that we can do crowdfunding, not all of them we can, because there's some capital structures that don't allow crowdfunding, but if we can, we do. If we can, we always have access up to $5 million for retail investors or not accredited. And there are other ways. There are some other regulations that cost more money that will let us get retail at the front door. Even if we don't do that, the same building is going to go, or the same project or the same fund is going to go in the secondary market after a period of lockup where we're not allowed to trade by regulators, but they will go there. And they will be able to buy it there, right, in about a year. Maybe at slightly lower rates, but with much more protection, right? So you still get much more benefit than if we didn't have this system. Why? Because the majority of the projects don't go on stock exchanges. Only huge, big projects go there, or big funds. But if we want to do, like, say, $30 million development of affordable housing, for example, which we have a few projects doing that. If we have that, they're not going to go on a public market. They're not going to go on a public REIT, REIT is a real estate investment trust. They're not going to go there, right? What they're going to do is just go to an institution meaning like a private equity fund that will give them all the money. But the problem is that they'll go to a bunch of different funds. It's going to take them a long time to fundraise, and you're not going to have this process where some high net worth individuals or retail investors get in, and then you don't list on the secondary market where retail investors can get in. So our vision is to actually turn every affordable housing project to an opportunity of home ownership, or project ownership rather. People are likely not going to own the unit where they live, but they will be able to reduce the rent payment, and they will own the project overall. They'll be able to earn, dividends or interest, and they'll be able to build a real estate portfolio. They can use these tokens actually that they invest in as leverage to go out and get loans. So that is really, really cool. And that's, I think, is the foundation of entrepreneurship. They can open a business. They can, definitely use that ownership over time, where if they were trying to buy a place, if that ever happens even, but that would take years to do. But you can actually start owning a piece of real estate from the get-go.
So that brings me to helping people understand that process, right? So a bit later, let's get into what a real estate investment trust is. But in this case, an idea of partial ownership of something that would normally be difficult to splinter or partition. It's kind of what you're saying that we can do with these coins, or by using blockchain, you can in effect own a part of the overall project. You may not own your specific unit. You may not be like in art or music, the executive producer, like the base funder, but you now can get in on a partition of something that would have been almost impossible to partition 30 years ago.
Yeah, exactly. So, you can technically partition things. We've had this partition called shares available for a long time, but only to public listed companies, right? So that's where you would buy these shares, right? So with blockchain technology, you can now basically, number one, because of the trading, you can easily find buyers, right? Because of the peer-to-peer trading, you can just basically sell your holdings to someone else. You can much more easily find buyers. And with the Jobs Act, which doesn't have anything to do with blockchain technology, but it just so happened that they came out at the same time with the Jobs Act, you're able to sell private, in a private placement, you're able to sell smaller projects, right? So real estate projects. By the way, 20 million projects is considered to be a smaller project. Yeah, you don't usually list that on the stock exchange. But still, we're talking about larger projects rather than individual units. Let's say I don't see a lot of utility right now in tokenizing an individual apartment or house, just because I don't know if it's going to be so likely that somebody will want to buy a piece of your house unless you're a VIP or a celebrity of some sort. Right. So we're talking about things that attract investors in some way, right? That said, I think in about a year or two, we're going to see a lot of platforms where people are going to go and get mortgage from their friends, right? Because the friends know you, they can vouch for you, they can all invest together in your house with you, right? So, that would work because they know you, right? They know where you live too. So so that blockchain opens a lot of opportunities in doing this, because you will invest in a trustless environment. If I went to my 20 friends right now and I said, guys, come and invest in my apartment with me, there's just no tools for them to do that. Right. They can transfer money to my bank account. What are they going to get? A paper certificate? But with blockchain, here it is. They own a piece of my house, right? And same thing with larger projects that will come to you and say, invest in my invest in this security. With blockchain, that you actually did invest and that you hold a piece, right?
Right. So when we think about a real estate investment trust, I was introduced to it by a friend of mine when we first started Black Land Ownership, and he was like, a lot of people. You should look at this larger than individual. You should look at it larger than flipping houses or larger than just starting a farm somewhere. But if you can get 100 people together, and if you can do this, if you can do that, you all should think about real estate investment trusts. And the hospital, these buildings that house hospitals or, Dwayne Reed or museums, they don't own those buildings. And I was like, what are you talking about? Of course they do. He's like, no, they don't. Why would you do that? And there are these trusts and these groups of people that buy large commercial spaces around the country, and they have clients that lease, and they make out deals with CVS, and they make out deals with Giant. And I started learning more. And again, it was that level of, well, how do I convince or explain to my friends who don't understand that principle that we're going to start a investment trust?
Yeah.
And you're going to get dividends based on this percent. And this is how we do payouts once every 6 months. It seems though with some of this blockchain technology, it's a bit more, I think, visceral for people, or it's a bit more grounded so that they could understand, no, if 50 of us take our tokens or take what we've already amassed as asset, put it together, we can now use that as investment or collateral or A, B, or C. What are your thoughts about that?
Sure. So REITs were again also created by the government, by the regulator, likely tax authority. It's basically a tax vehicle for people to invest together, in a very tax efficient manner, right? So when we do at SolidBlock, when we do tokenization, a lot of times, at least it will be listed optionally as a REIT. We have a way to do a REIT at a later stage. It is a little, costly, but it makes sense from the tax perspective. But what you're saying is more of pooling people's resources together, and you can definitely do that with fractional ownership. And that's what the majority of what's called real estate sponsors, that's what they do, right? So there are a lot of real estate agents that at a certain time become a sponsor. What's the difference? An agent basically connects a buyer and an investor, a buyer and an owner, and then a sponsor will put a project together, and they will bring investors who they know to put money down with them to either buy an asset or buy a piece of land and develop an asset, right? So that's something, by the way, that you can easily do with our platform, right? So we get a lot of landowners that say, I can't get a loan at a bank because I'm not known yet as a real estate sponsor. So help me raise. I have 20 investors. I know 20 what they call LPs, limited partners, that can come and each put $1 million, $500,000 down, and then I'll raise enough money to do this. So you can easily do this with SolidBlock. Putting 20 people together means syndication. That's basically a professional word for it. Right. So if you have some friends that want to come and invest with you in a specific project, which solves a specific social purpose, maybe you want to open a commercial center in a specific, minority-owned commercial center at a specific neighborhood. Fantastic. We can get that facilitated, right? Provided that you have the right developer, the right sponsor, somebody with experience who can actually manage that, right? So that's highly recommended, because real estate is not easy, right? So it's not, no matter how it looks, right? It's different to flip an apartment than say build something big, right? So flip an apartment means buy an apartment, possibly distressed, renovate it, sell it. A lot of people that get started in real estate by doing what's called fix and flips, right? So, and then they grow, and then they realize, and then they get finally an offer on a big project, and they jump on the opportunity, buy land, and that's how they become, sponsors. So, if we have 50 people and 50 friends who want to jump in on an opportunity, that's something that you can easily do at SolidBlock, either with existing projects that we have, especially if, I mentioned young people and investors that are in our audience, they love to invest for cause, right? So let's say if we have African-American investors and they like the affordable housing project that we're building that we're building in an area where it's really needed, right? Then that's something that I think that we can gain a lot of attention of these specific investors, right? So I think that'd be a good thing.
With SolidBlock and some of the projects that you've seen, or some of the projects coming down the pipe, what gets you the most excited, right? Like, what is pushing, in, at least in your mind, into a new arena of what you can do with either tokenization or what you can do merging um, the asset of crypto, the asset of the land, and
Yeah.
the convergence?
Yeah, so number one is the ESG, environmental social governance. So, you know, all of these things are very close to my heart. For example, we have a project in Florida where we invest in detox centers, opium and alcohol detox. And unfortunately, there's a huge epidemic, especially with COVID-19, and has exacerbated. And so, you know, it was exacerbated by the pandemic. So, that one is one of my favorites, you know, having personally lost a few of my friends to this epidemic. So basically that's one. And then we have the first sustainable resort in Panama that just, you know, really, really close to my heart, with, you know, nature preservation and conservation, and, you know, people caring about the environment at the same time. You know, obviously everybody goes on vacation. So when I go on vacation, I really, really care about where I stay. So this I think is fantastic opportunity. Plus the investors will get to, you know, with certain levels of investment, they also get to experience and get to stay. Right. So affordable housing, as I mentioned, you know, that's the S in the ESG. Right. Like the detox as well. That's the S, the social element. That one is really, really close to my heart because we can make huge difference there. What else? Yeah. So environment, social governance as well, because we're going to bring some projects to DeFi, decentralized finance, where individuals can give loans, right, to different projects with tokens as collateral. So that's, by the way, another way non-accredited investors can get involved.
I was going to say, what would be different, or what are you able to do with affordable housing or with environmentally oriented projects utilizing either decentralized finance, blockchain, or crypto that you can't do or is not encouraged in the same way in a more traditional finance setting?
Well, that's a fantastic question, Chris. So with decentralized finance, you have to have something in a digital format before you can collateralize it, right? And actually, that's why I call tokenization. What we do with tokenization is a process of digitizing real estate on the blockchain. Tokenization is a bridge to decentralized finance, because we're taking real world assets, digitizing them in a way that now we can, you know, push it over to the DeFi. So that's number one. Number two, blockchain allows us to, you know, put these projects, of course, in digital format, so at least they can be traded even before going to DeFi. And crypto, of course, there are many crypto investors that are cashing out of crypto when crypto goes up in value. And then, you know, they have a limited opportunity to buy real estate with that. There are several platforms, including SolidBlock. We're also assisting brokers and real estate owners to sell their assets for crypto. But when you have tokens, you actually can create a portfolio, right? When you have crypto, you have somewhere to put it. And real estate is specifically extremely, extremely lucrative, because if you invest in what's called an opportunity zone real estate, opportunity zones are zones in different usually urban environments, which are designated by the government as zones for development. So if you invest, even forget crypto, if you invest in an opportunity zone and hold that asset, you can defer paying taxes, right, until you sell that asset. So when you invest crypto in an opportunity zone, you can defer your capital gains. So that's something that's really cool, right? If you invest your IRA cryptocurrency, like if you invest it out of your IRA retirement account in cryptocurrencies, you can also defer paying taxes when you invest in real estate. So that's, you know, I'm not giving any investment advice here. I should say I'm not an investment advisor, you know, but, and I, you know, if I had some money in the IRA And I knew that this is a possibility, putting money into crypto. And then, of course, the laws are changing now. So we have to go and check what the new law says, right? The new taxation of crypto. But I don't think that they would be taking that away. That's a really good, I think that's a really good tax mechanism.
Yeah, you made me think of something. How would you engage in the conversation / argument of where to categorize crypto? Because some people are saying it definitely isn't a currency, and that was proven when they did the Silk Road trial, and they tried to accuse a guy of embezzlement, and his lawyer was like, "It's not money; it's a token. It's a placeholder." And the government kind of gambit themselves to where the argument they used to try to get the person in trouble then opened up crypto to then be more usable for people. So where do you place it? Because it's not a traditional asset per se, but there are already traditional assets that it's very similar to. So why isn't it categorized the same way? What are your thoughts?
I think the government is actually pretty smart on this issue, and it's actually a no-brainer when you think about it. The test for a security, well, actually, it's a good thing is that it's an asset and it's not a security, right? Crypto. If they categorize it as security, then there would be a lot of restrictions on it. But because the government can't really effectively place restrictions on it, except where you take it out, right? Like taxes and things like that. So they found, a great opportunity to actually tax people, create more revenue. But, right now, a majority of the people are not using cryptocurrencies for payments. There are quite a few that actually are. Usually they're not using Bitcoin, but there's special stable coins and other coins that are used for remittance payments, for example, and different payment networks. So, but Bitcoin, Ethereum are not used so much for payments. Although a lot of people initially were doing that when, that's how I started. I bought a lot of Bitcoin in 2017 and 2018 and used it to pay my team overseas because it was much cheaper to actually send it. Well, it's free to send it, but they of course have to go and withdraw it from an ATM, in India, for example. And, as opposed to sending it via PayPal or bank account or anything like that, where you lose at least 2, 3, maybe 4, sometimes 5%, right? With smaller transactions. So I bought a lot of Bitcoin, just to pay all of my team in Bitcoin. I didn't hold it. If I would hold it, I don't know if we'd be talking right now. I'd probably be somewhere in Bali or I don't know, St. Bart's or whatever, in my house with a huge pool. So, but I had a business at a time, and I had to make the best of it. So, yes. So basically, crypto is, and right now I don't consider it a currency because it's currency has to be used for an exchange in my mind, right? It has attributes of a currency. It's a unit of exchange. Technically, it's a unit of account. Technically, and but right now most people are holding it or hodling it.
Right.
So that's why I think that's why I think that the government made the right choice categorizing it as an asset, because that's what you do with an asset. You're expecting it to go up in value, right? To go up in value at a certain point. But it may change, right? If stable coins, by the way, are not, I don't think that they are classified. I hope that they're not as assets, so that you can actually, I'm not educated on that, but they shouldn't be, because obviously you hold them so you can do payments. That's a true currency, right?
So also you bring up an interesting idea of being able to back whatever the currency is. And one of the things people say is, oh, well, crypto is fake, or it's not real, or what have you. And in my mind, it's like, well, trading cards weren't real till people exchanged them.
Dollar is not real.
Dollar, it's onion paper. Like, what gives it value? But there was an idea of, well, the dollar is a representation of a gold amount or the wealth of the nation or something of that nature, which we don't have anymore. But with some of the crypto coins now, we have DAI, or you have these stable coins. They supposedly are pegged then at an almost 1-to-1 ratio, or can provide some actual backing, which is a kind of weird cycle of the money is backed by kind of imagination at this point, not gold, but then the money can back the crypto, which makes the crypto real. what are your thoughts on those stable coins versus something more like the altcoins that are more volatile for day trading?
So I don't know if I would use the word real imaginary. It's just basically, backed by, like you said, backed by a real asset, right? So when we take a digital representation of a dollar, which is like USDT or USDC, it follows the dollar, so it's also inflationary like the dollar. You print more dollars, your imaginary or virtual or money like USDT, USDC also goes down in value, unfortunately. But it makes things a lot easier to pay via digital currencies or stable coins than the actual dollars, right? So because most banking systems are really outdated. You do have Venmo and other things, but it's much easier and cheaper to do this with a decentralized system. So hence stable coins. I'm looking for, and I'm more interested in stable coins that are backed by real assets. So, gold, silver, commodities, and now real estate. So we're actually working on a stable coin or an index coin of our own called SolidCoin that will be backed by the index of properties on our network, right? So, and to make it more interesting, we're creating a decentralized investment bank where institutions and also individuals through a governance mechanism will decide which assets go on the platform by voting and bidding. So that's actually going to be the first decentralized investment bank for real estate, and I think a lot of things in the industry are going to go that way, to combine highly compliant processes with decentralization.
So, without spilling the special sauce or giving away too many of the secrets, how does that work in conjunction with those different parts work together in the sense of the real estate arm, the investment bank part, and now working with the decentralized finance element or the blockchain and crypto element? What's actually happening there? Or like basically for people that may not know, if I'm correct, when you say index, instead of like, let's say purchasing a stock of an individual company, you could take a group, like a medical group or types of or technology index, and you can then invest in that. And so the individual volatility of each company isn't quite so efficacious, but as a group, how it moves, you've invested in that. So how does that relate to real estate and crypto and what you're talking about?
I'll give you an example that I think everybody here can understand. S&P 500, right? We know S&P 500, that's an index of the top 500 companies in the US. And it usually kind of signifies how well the economy is doing. And on average, it's growing at 10%. But some years it's growing at 20%, some years it's growing at 3%, right? So on average, it's 10%. And so what do we have? We have a highly inflationary economy. You're not recommended to hold a lot of money in US dollars, right? But when you invest in the stock market, sometimes they say, just put some money in S&P 500 index. Again, not an investment advice, but that's basically kind of a way to invest in tech, but with lower risks in some way, because it's a pooled asset right there, right? So what if you could, instead of US dollars, just use an S&P 500 coin, right? If there was a coin out there that just kind of followed the index and is growing, at 10% every year, where the US dollar is not. So we're creating different indices, actually. There will be indices that are real estate sector focused, but then there will be one that combines all of it's all going to be highly curated quality real estate on the investment bank and the platform and the marketplace. So if we combine it all into an index, which is global index of curated real estate, and which is lower risk than tech, but growing at a high pace, because development real estate actually can give you sometimes 20% returns. So if we combine less risk yielding with that, we can get to some really good returns. And that's basically what the coin's going to do. It's going to trace the value of that index, right? And also potentially give dividends or interest, right? Or we can incorporate those into the growth of the coin. So the details are still being developed, but the idea is to give both institutions and individuals a coin to use than something that's based on a deflating dollar.
If you were to have your druthers and best case scenario, you look up in 5 years, let's say 3 years, because technology moves so quick. You look up in 3 years, what would you like to see SolidBlock doing at that time?
So we're going to be the largest and decentralized investment bank at that time. And so, having thousands of projects join the marketplace, having millions of users that will be able to grow wealth. I want to have people that will say, instead of taking 20 to 30 years to buy an apartment or to grow my wealth and start, become independent and free, it took me 3 to 5 years to do that, right? Along with financial education, which you mentioned, that people are becoming more and more educated now, and that's fantastic. So, but we also need to give them the tools, right, to do things in the way that makes sense without endangering them, without risking, all their money and so on. So, and invest in something that's relatively stable, like real estate, but also without having to sit there. What does an average person do? What is the biggest investment they make in their lifetime? It's usually their home, but they only own one and they usually live in it, right? So you have a 30-year mortgage that you're paying all your life, and by the end of it, you will end up with a house, and then you're going to be retired by then.
Right.
So, we want to give people an opportunity to and by the way, you get to pay for 2.5 houses by the time that mortgage is over, right? So and we want to do things differently. We want to do real estate differently. We redefine what it means to invest in real estate.
Well, what would you suggest, right? So as a young person, as an artist, I didn't want to be attached to any one location.
Yeah.
And I didn't really focus on the idea of ownership of land or investment property. It was always like, well, if you buy a house, it's to live in, like you said. Or was this idea of 30-year mortgage, and you spend so many years trying to save up that money and pay off, and you're paying more. When looking at possible investments, another reason I wasn't interested was, well, my savings account might yield 3%, 5%, something like that. Some of these other investments might yield 7%. Well, in crypto, I'm seeing people get 20x, 50x, like things that are impossible in every other industry. But there isn't much standardization, there isn't much structure around it, and there isn't much consistency to it, so that people also lose a lot of money. When looking at these opportunities, is there another realm where you see that 50x, 100x, 200x outside of crypto and blockchain?
Yeah, well, yeah, of course, you have opportunities to invest in startup companies as well. You have those tokenized, and you have some funds that you can invest in. But like I said, those are definitely risky. There's no free lunch. Anything that will offer you, 100x, like SolidBlock, we're raising a fund right now, or not a fund. We're raising, a seed round right now. So, but it's definitely a risky investment, right? We have these dreams and hopes, but startup companies are a risky investment. So I would say, have a good base of real estate tokens, and then also seek some unicorn opportunities, right? And specifically people that right? So because you have it's almost like having inside information. That person, that they will not, they'll do all they can to keep your money safe and to make it into something good, right? Support someone, support someone local. And that's what I think what investing is all about nowadays. Support a cause, support a great person. And that's what's available now with the tokenization.
Awesome. Well, before we wrap up, I want to say thank you for coming on and sharing your depth of knowledge on the subject. Sorry if we had to keep you in the shallows for part of the conversation, but I really appreciate you sharing this with us. Do you think, and this is definitely a weighted question, do you think that blockchain and some of the new technologies allow for more altruism in connection with generating revenue? Because in the world I'm in, there's always this binary of either you make money or you do what's good. And clearly there's a lot of gray. Do you think some of this technology allows for more of that gray?
So in terms of the tech itself, it allows for much more opportunity to support causes. That's for sure, because we're bringing investment to the masses. We're making people aware, and they can cast their vote what to support. And it's up to them. At least just availability and accessibility will do the trick. And the end of the day, what's important is how the technology is used, right? And unfortunately, SolidBlock right now is still centralized. That's why it's important for us to make the right decisions, right? And also, when we create a decentralized investment bank that's driven by, say institutions, because they have the most money out there, it's also important for us to give other investors a vote so that it keeps having the same flavor. So these ESG projects also get on, right? So, also what's very important to understand is that we're not magicians. Like we're just kind of amplifying the social trends and the government trends. Because at the end of the day, the government is the one who's setting the tax credits, the carbon credits, and that's why ESG is so popular. And it's a good thing, right? And now you have a new government in the United States, and Joe Biden is saying he's going to do this and it's going to do that to keep the momentum for sustainability and all of ESG going, and that's fantastic. So if that continues, right? If that trend continues, we're going to see that's where we're getting it, right? So obviously, if we were, people are not investing in the story alone; they need to have returns, and so these tax credits definitely help. And then technologies that are beyond tokenization, or real estate technologies, property technologies called prop tech, they're the ones that are making sustainability make sense also, right? Because you can do a lot more things a lot cheaper now. You can have like zero impact house, for example, and so on. And on the social trends, right, where supporting minorities will also make sense if all of the minorities come together and pool their resources and actually invest in developing ecosystems for themselves, right? So that's where I would kind of call on the communities to get really educated. And I would love to work with African American communities and Latin American communities. So I mean Latin America, basically Spanish-speaking communities in the U.S. that really need to to grow and get on the same level up with the rest. And obviously you I think also as is with me and our Jewish community, you always see you kind of gravitating naturally to your community when you invest and when you get to know people because of trust, and that's normal and it's great. But the problem is where the majority of investors are white and male, it's a big problem for the rest of us, right? So even women are getting less than 1% of let's say of VC investment. And I think African American entrepreneurs are getting almost the same, or maybe a little less, a little more. And that's a problem when the majority of people with money are investing in their own kind, right? So that's why we kind of need to stick together. And I think that's actually a great thing. That will enable minority communities to come together and pool their resources and support people within the community.
Well, I think something that's been brought to the fore in this discussion: how do you get people to the point where they have disposable income? When you have people that are check to check or are already living in debt, how do you find reasonable methods for them to invest? Because if you tell me, Chris, don't spend any money, put your money that you do have into an account that gets a 3% return. And it's like, well, I have $100. I make $3 every year. That doesn't help me. I'd rather use my money. Whereas if I had an extra, $5,000, okay, that 5% can actually build up, or I can take that 5%, and do something with it in 2 years, or I can take that 12%. And so I think part of it is getting us to there where there's money to invest and
Sure.
getting familiar with the language. Like when we opened up and you started talking about IPOs, you started getting into some of the language. I don't know if everyone watching understands derivatives versus futures versus
Yeah.
speculation versus, and so getting communities that have been pushed out and that also
Yes.
self-segregated to say we're going to step up to the plate, but also know that when we do, we're not getting the faulty deals. Because also
Mhm.
traditionally you
It's
look at
true.
certain communities, they don't, they aren't given the wise or the more
Yeah.
erudite opportunities at times,
Yeah, for
and are taken
sure.
advantage of for being uninformed. And so I'm excited by some of this new technology is that it's so new that we can learn it as it's happening.
Oh,
You
I
can't,
love that. And that
you
helps
know,
you also to level the playing field once again, because nobody knows about this. So we have a course, actually, Tokenization 101 course, and I'd love to give your listeners a 50% discount, or anybody. I'll give you a code for it. So you'll be able to, yeah, you'll be able to learn. It's a, yeah, 10-hour course that actually gives you the basics of both real estate and blockchain. So kind of on the intersection of two. And so, and there's so many courses, and YouTube is the largest university. You can learn about finance, you can learn about real estate. There are so many resources. And in terms of opportunities, on SolidBlock, for example, we vet everybody and do due diligence on everybody. We actually are looking for African American sponsors and developers to work with. So if anybody is listening, we'd love to work with you and actually create that, to create to business together and attract investors together. And like I said, support the communities and bring these projects to life.
it's awesome. All right. Well, it'll be great to continue working with you. I'll probably take you up on this class. I have to, I got to speak to the budget department over here, but we'll make sure we can make that happen.
All right.
And thank you for coming on. Like this has been very insightful.
I appreciate that as well, the invitation, Chris, and that you're very knowledgeable and your questions have been great. Happy to continue working together.
Yeah, and for people that would like to find you in the future or learn more about some of your projects, what's the best way?
So I'm very accessible on LinkedIn, for example, but also on Twitter at Yael Tamar. You can go at SolidBlock CO, on Instagram, SolidBlock CO. Wherever you guys are, you can find either a SolidBlock account, which will get to me. You can email me, Yael at solidblock.co, register on our website. We'll have opportunities for non-accredited investors literally in 2 to 3 weeks for different projects that we're putting on crowdfunding platforms. So, reach out, register, let's stay on top of it together and create this amazing new real estate.
Yes. And by osmosis, people who are watching this learn. We already got dropped jewels of they're doing real estate, they're doing tokenizing, they're doing group investments. Now they have classes offered. Diversify that portfolio.
Yeah, exactly. I love it. I love it.
uh,
Okay, well,
all
all
right.
right, Chris. I'll see you soon. Thanks.
All right. And this has been Just for My People. Thank you for coming on, Yael Tamar. Thank you. Yay.